Most people pay their car insurance every month and have no idea what they're actually paying for. They know they need it, they know it's required, they know it costs more than they'd like, but if you ask them to explain what their policy actually covers, what each piece does, what it doesn't do, and why it's there, most people couldn't tell you. And that's a problem because you can't make good decisions about something you don't understand. You can't know if you have too much coverage, not enough, or the wrong kind if you don't know what the pieces are in the first place. That's what we're going to fix today. I'm going to walk you through every major part of a car insurance policy, explain what each one actually does in plain language, and by the end of this, you'll understand exactly what you're paying for and why. My name is Jim Eddington, and my agency helps individuals and families navigate exactly this kind of thing every day. So let me break this down for you. Your car insurance policy is made up of several different coverages, and each one does something different. They're not interchangeable. They each exist to handle a specific type of situation. The easiest way to understand the whole thing is to walk through them one at a time, and for each one, I'll explain what it covers, when it kicks in, and why it matters. Let's start with liability, because this is the foundation of every auto insurance policy. Liability coverage is what pays when you are at fault for an accident and someone else gets hurt or their property gets damaged. It's not for you, it's for the other person. If you run a red light and hit another car, your liability coverage pays for their medical bills, their lost wages, their pain and suffering, and the damage to their vehicle. That's what liability does. Liability is split into two parts. The first is bodily injury liability, which covers injuries to other people. The second is property damage liability, which covers damage to other people's property. Their car, a fence you hit, a building, whatever it is, when you see numbers on your policy like $100,000 per person, $300,000 per accident, and $100,000 property damage, that's your liability limit structure. The first number is the most your policy will pay for injuries to any one person. The second number is the most it will pay for all injuries in a single accident combined. And the third is the most it will pay for property damage in that accident. This is the coverage that every state requires you to carry, and it's the coverage that protects you financially if you cause harm to someone else. If a claim exceeds your liability limits, you're personally responsible for the difference. That's why your liability limits matter more than almost anything else on your policy. A 20-year-old car with high liability limits is a much smarter setup than a brand new car with state minimum liability. The car protects you physically, the liability coverage protects you financially. Now let's talk about collision coverage. This is the one that pays to repair or replace your own vehicle when you're in an accident, regardless of who's at fault. If you rear-end someone, collision pays to fix your car. If someone rear-ends you and they don't have insurance or you don't want to wait for their insurer to sort it out, you can use your own collision coverage to get your car fixed and let the insurance company settle up between themselves later. Collision comes with a deductible. That's the amount you pay out of pocket before the coverage kicks in. If your deductible is $1,000 and the repair costs $4,000, you pay the first $1,000 and your insurance pays the remaining $3,000. The higher your deductible, the lower your premium because you're agreeing to absorb more of the cost yourself before the insurance responds. One important thing to understand about collision: if your car is totaled, the insurance company doesn't pay what you bought it for or what you think it's worth. They pay the actual cash value of the vehicle at the time of the loss, which is basically what that car would sell for on the open market in its current condition right before the accident. If you owe more on your car loan than the car is worth, which is very common, especially in the first couple years of ownership, the insurance payout might not be enough to pay off your loan. That's a gap that catches a lot of people off guard, and it's why gap coverage exists, which I'll cover in a minute. Next is comprehensive coverage, and this one covers damage to your vehicle from things that are not collisions. Think of it as everything else. A tree falls on your car, that's comprehensive. Your windshield gets cracked by a rock on the highway, comprehensive. Someone breaks into your car and steals your stereo, comprehensive. Hail damage, flooding, fire, hitting a deer, all comprehensive. Like collision, it comes with a deductible, and like collision, it pays actual cash value if the vehicle is totaled. People often carry collision and comprehensive together, and they're sometimes referred to as full coverage. Although that's not an official insurance term, and it doesn't mean what most people think it means. Full coverage doesn't mean everything is covered. It just means you have liability plus collision plus comprehensive, which is the most common package. There are still plenty of things that aren't covered, even with so-called full coverage. Now let's get into coverages that protect you and your passengers, starting with medical payments coverage, sometimes called MedPay. This is a relatively simple coverage. If you or your passengers are injured in a car accident, MedPay covers medical expenses up to the policy limit regardless of who's at fault. It doesn't matter if you caused the accident or someone else did. MedPay kicks in either way. The limits are usually modest, $5,000, $10,000, sometimes up to $25,000 or more. It covers things like hospital bills, x-rays, surgery, and ambulance costs. In some states, instead of MedPay, you'll have something called Personal Injury Protection, or PIP. PIP is broader than MedPay. It covers medical expenses like MedPay does, but it can also cover lost wages, childcare costs, and other expenses that result from the accident. PIP is required in no-fault states where each driver's own insurance covers their own injuries regardless of fault up to the PIP limits. Whether you have MedPay or PIP depends on what state you're in and how your policy is structured, but the core idea is the same. It's there to cover medical costs for you and your passengers after an accident. The next coverage is one that a lot of people overlook, and it's one of the most important: uninsured and underinsured motorist coverage. This is the coverage that protects you when the other driver is at fault, but either doesn't have insurance at all or doesn't have enough insurance to cover your damages. Let me explain why that matters so much. Say someone runs a red light and hits you, you're injured, medical bills, lost wages, the whole thing. The other driver is at fault, but when their insurance information comes back, they're either carrying state minimum coverage that's nowhere near enough to cover your bills, or worse, they have no insurance at all. In a perfect world, their insurance would pay for everything. But we don't live in a perfect world, and a significant percentage of drivers on the road are either uninsured or carrying bare minimum coverage that won't come close to covering a serious accident. Uninsured motorist coverage steps in when the at-fault driver has no insurance. Underinsured motorist coverage steps in when the at-fault driver has insurance, but not enough to cover your damages. These coverages pay you. They protect you and your passengers when the person who caused the accident can't or won't cover the cost. In many states, you can set your uninsured and underinsured limits to match your liability limits, and I'd strongly recommend doing that. It's usually not expensive to add, and it closes one of the biggest gaps in most people's policies. Think about it this way. You can control how much liability coverage you carry. You can't control how much the other driver carries. Uninsured and underinsured motorist coverage is how you protect yourself from someone else's bad decision. Now let me cover a few additional coverages that you'll see on many policies. Rental reimbursement coverage pays for a rental car while your vehicle is being repaired after a covered claim. This seems minor, but if your car is in a shop for 3 weeks, which is not unusual given the current repair timelines and parts delays, rental car costs add up fast. A rental at $40 to $50 a day for 20 days is $800 to $1,000 out of pocket. Rental reimbursement coverage handles that for a very small addition to your premium, usually a few dollars a month. Roadside assistance coverage is exactly what it sounds like. If you break down, get a flat tire, lock your keys in the car, or need a tow, this coverage sends help. It's inexpensive and convenient, though some people already have it through their vehicle manufacturer, a credit card, or a separate membership like AAA. It's worth checking whether you already have it before adding it to your policy so you're not paying twice for the same thing. And then there's gap coverage, which I mentioned earlier. Gap insurance covers the difference between what your car is worth and what you still owe on your loan or lease if the vehicle is totaled. If you owe $22,000 on your car loan and the actual cash value at the time of the accident is $18,000, your insurance pays you $18,000. Without gap coverage, you're responsible for the remaining $4,000. You still owe it to the lender even though the car is gone. Gap coverage fills that hole. It's most relevant when you're financing a new vehicle with a small down payment or leasing where negative equity is common in the early years. So now you know what all the pieces are. Let me explain how they work together in a real scenario so you can see how this plays out. You're driving home from work, someone runs a stop sign and hits the driver's side of your car. You're injured, nothing life-threatening, but you need an ambulance, an ER visit, imaging, and a few weeks of physical therapy. Your car is badly damaged, the other driver is at fault, and they have insurance, but their liability limit is only $50,000. Here's what happens on your policy. Your MedPay or PIP kicks in immediately and starts covering your medical bills up to its limit. That might be $5,000 or $10,000. The at-fault driver's liability coverage pays to their $50,000 limit toward your medical bills and vehicle damage. But your medical bills alone exceed that. Your underinsured motorist coverage picks up the difference between what the other driver's insurance paid and your actual damages up to your own underinsured limit. Your collision coverage pays to repair or replace your vehicle minus your deductible. And then your insurance company may go after the other driver's insurer to recover that deductible through a process called subrogation. And your rental reimbursement coverage pays for a rental car while yours is in the shop. Every one of those coverages played a role, and if any of them had been missing, you'd be covering the gap out of your own pocket. That's why understanding what each piece does matters. It's not about having the most coverage possible. It's about knowing which coverages actually protect you in the situations that are most likely to happen. So here's where you should be after hearing all of this. You should know that liability is the foundation. It protects you financially when you're at fault, and your limits should reflect what you actually stand to lose, not just what the state requires. You should know that collision and comprehensive cover your own vehicle, and whether they make sense depends on the value of the car and what you're paying in premium. You should know that MedPay or PIP covers medical costs for you and your passengers regardless of fault. You should know that uninsured and underinsured motorist coverage is one of the most important and most overlooked protections on your policy. And it exists because you can't control what the other driver carries. And you should know that rental reimbursement, roadside assistance, and gap coverage are small additions that can save you from real out-of-pocket costs when something goes wrong. The goal isn't to carry the maximum of everything. The goal is to understand what each coverage does so you can make informed decisions about what belongs on your policy and what doesn't based on your actual situation. If you want help reviewing your policy to make sure it's set up properly, or if you're looking at your deck page right now and it doesn't make sense, that's exactly what we do. We work with individuals and families and businesses in Arizona, California, Nevada, and Utah. There's a link in the description. You can get a quote and we'll help you figure out exactly where you stand. And if you want to see how to put this knowledge to use and actually save money on your premium, check out our video on how to lower your car insurance without losing coverage right here. Thanks for watching.